This weekend, Donald Trump made a post on Truth Social alluding to the fact that he is going to be pushing for a 50-year mortgage, whereas currently the gold standard is a 30-year mortgage. The post itself was a picture of FDR with 30-year mortgage above it, and then of course a picture of Trump with 50-year mortgage above it. We'll get into the context of that and then get into if a 50-year mortgage makes sense, if it actually will help affordability, or if really just the banks will win out. But as times change, as the economy changes, so do regulations and policy and how you have to affect things. So let's see if a 50-year mortgage is on the horizon. If you have any thoughts or opinions as we get into it, make sure to leave a comment below. And if I haven't met you yet, my name is Connor Webb. I'm a mortgage loan originator licensed in Washington, Oregon, California, Idaho, and Arizona. I'll have a link in the description of this video if you'd like to reach out and connect about buying, selling, refinancing in the next year. So before we get into a potential current day solution for the housing affordability crisis, we have to get into how the original 30-year fixed mortgage came to be. Before the Great Depression, most home loans were actually 3 to 10 years, interest only, and ended with balloon payments. However, when the economy crashed and the Great Depression set in, homeowners lost their homes because refinancing dried up. In 1934, FDR's National Housing Act created the FHA, which introduced fully amortized long-term loans. The 30-year fixed rate loan became the balance between affordability and risk, and by the 1950s, this was the national standard for mortgage lending. However, over time and through economic cycles, affordability has changed. And as we look at the current data, this is the affordability index from the Federal Reserve Bank of Atlanta. And as you can see here, this line at 100 is the affordability threshold. Anything above this means that homeownership is relatively affordable. Anything below this line, it assumes that homeownership is relatively unaffordable. And as you can see from about 2021, when we saw the hyperinflation in the housing market with the super low interest rates, the past few years, interest rates have then gone up while values have remained high. And whereas 100 is considered affordable, currently we are at 64, nearly 40% below where is considered affordable. And with this data, the median household income in the United States is just shy of $80,000. The median home price is $401,000. The average interest rate, as stated here, is 6.6%. The median monthly principal and interest payment is $2,302, and the total payment with everything included is $3,106. And if we toggle this from the affordability index to the share of median income, it's stating that essentially 47% of the share of the median income for the average household is having to go towards a housing payment to buy the average home. Now, with this context in place, this can explain why Trump might propose a 50-year mortgage, because in theory, a longer term means that you can lower the potential payment, and this might help affordability, but really does it? The Federal Housing Finance Agency Director Bill Putti confirmed that the agency is working on it. The goal: help first-time and younger buyers qualify amid higher prices and rates. However, if a 50-year mortgage were to be implemented, then regulations would have to change. Currently, the CFPB rules limit qualified mortgages to a 30-year term. A 50-year loan would be considered a non-qualified mortgage unless new regulations were adopted. So if this product were a non-qualified mortgage, this can lead to higher interest rates and also tighter lending standards. The promise from this is lower payments. For example, on a $400,000 mortgage at a 6.5% interest rate, a 30-year term would have a principal and interest of $25.28 a month, whereas a 50-year term would have a principal and interest of $22.55 per month, which is a $273 a month difference, or 11%. That small reduction could make the difference for some borrowers to qualify in high-cost markets. The trade-off is total overall cost. While payments are low, the amount of interest you're paying on a mortgage over 50 years compared to 30 years is astronomical. With this same $400,000 loan scenario, the lifetime interest would jump from around $510,000 over the 30-year term to about $953,000 over the 50-year term, nearly doubling the total interest that you would be paying. Homeowners would also build equity slower, as when you look at an amortization schedule, the interest is heavily front-loaded, so it would take longer for them to build up equity and pay down the principal. Now, how would this affect the real estate market overall? By extending loan terms, it could help affordability for some individuals, the young or the first-time home buyers. However, if supply stays where it's at, this very well could drive home prices that much higher because people can afford more of a home because they have lower monthly payments. So who could benefit from a 50-year mortgage? Well, potentially a younger first-time home buyer who is purchasing in an expensive market, or it could be someone that's looking to prepay and pay additional amounts on their principal on a monthly basis to take advantage of the lower payment, or potentially investors optimizing cash flow, although this program would probably have guidelines to make it a first-time homebuyer program. So who should be cautious of a 50-year mortgage? Well, essentially everybody. If you can afford a 30-year mortgage, paying it off sooner with less interest, obviously that is the better play. but especially be cautious if you are stretching to qualify, which this program is meant to benefit those people, but those are the people that could be taken advantage of the most. Also be cautious of a program like this if you are expecting rapid equity gains, because likely that is not going to happen. We're not going to see values continue to go up like they did during COVID. We could realistically expect 2 to 4% of appreciation in real estate moving forward, is my opinion. And if you are uncomfortable with the overall long-term costs of a 50-year mortgage, definitely steer away. So my take, as a lender, I do appreciate having more tools in the tool belt, but those tools need guardrails. If a 50-year mortgage actually does launch and become mainstream, become a qualified mortgage, this program needs transparent disclosures, it needs no prepayment penalties, and clear education on the difference of this program. This program could be useful for select buyers, but it is by no means the cure to the affordability crisis. We need a higher housing supply. So if you have any questions about a 50-year mortgage, or if you're interested in getting pre-approved yourself for a 30-year mortgage, or if you're considering a refinance in Washington, Oregon, California, Idaho, or Arizona, make sure to reach out. Again, I'll have a link in the description of this video to connect. Make sure to like and subscribe to this channel for more mortgage and real estate videos, and we'll see you in the next one.